Sage here for Kalkine Media. Thanks for joining us. Your time is valued. Please stay watching for our next educational topic. Index funds. What is an index fund? Let's cover the topic in more detail. An index fund is a kind of exchange-traded fund or mutual fund. It is a low-cost investment vehicle for investors compared to other investment vehicles. Index funds seek to replicate the performance of a benchmark, which is an index. An index is a group of stocks and measures the changes in the price of its underlying stocks, bonds, commodities, etc. It essentially measures the performance of the underlying assets. Indices are based on industry sector, market capitalization, etc. What are the advantages of index funds? Firstly, diversification. Most of the investors prefer index funds for diversification. Since some indices can have 500 stocks, 1,000 stocks or 2,000 stocks, the investor in such an index fund will have exposure to all the companies in the index. It's low cost. The variation in expenses charged by investment managers across index and active funds could be material to the performance of the fund. Since the index fund has a lower cost of operation, the investment managers often charge the lowest fees in the market for similar products. It's specific exposure. An investor seeking exposure to a specific region, industry, or region again has the accessibility for a range of index funds. With lower costs already in place, the index funds industry continues to gain momentum driven by expanding offer base. So what are the types of index funds available? Dividend-focused index funds. Index funds with specific intention to invest in companies that pay dividends are called dividend index funds. Sector funds. These funds are floated to capture the growth in a specific sector like consumer staples, technology, industrials, banks, energy, communication services. There are many sector-specific indices which are also available based on the region as well. Equity index funds. So equity index funds are a broader type of index fund which only hold equity shares or stocks. All index funds that invest in equity shares fall under this category, including sector funds, dividend funds. Investment-grade bond funds. Investment-grade bond funds mainly invest in bonds that are rated as investment-grade by the credit rating agencies. High-yield bond funds. High-yield bond funds mainly invest in bonds that are rated as non-investment grade by the credit rating agencies. International funds. These index funds are benchmarked to overseas indices and invest in global securities. It also includes equity and bond index funds that invest abroad in other countries. Thank you for your time watching. Sage here reporting for Kalkine Media.